SPACS and Chamath, Palihapitiya. Hey everyone, it's Wolfgang. So SPACs have come up in the news again. Chamath Palihapitiya has thought about jumping back into SPACs. He sort of repopularized them. They've been around for a long time. They were not that popular until in the last several years. He sort of created several and had some mixed results. But this video, what I'm going to do is I'm going to talk about SPACs in general and the good side of SPACs, those that have done well, because a lot of them have. A lot of SPACs have done well. And it's partly to his credit that SPACs have become a thing, a way to invest. Although there are some things to know about before you invest in SPACs. So let's talk about special purpose acquisition companies, SPACs, special purpose acquisition companies. They're publicly traded. And initially, when they are publicly traded, they have no customers and they have no revenue. They don't really have a business. Why would people invest in a publicly traded vehicle that has no customers and no revenue? Right? That's a reasonable question. And how do these sorts of things go public? They're special purpose acquisition companies. Their initial agreement with the exchange they list on is that they are going to acquire a business. And the answer to the question, why would people buy shares in a public company that has no customers and no revenue? The reason, it's because the reputation of the SPAC founder or founders. In the case of Chamath Palihapitiya, he had a background. He had a certain, a higher profile in high technology that a lot of people do not have. That's how he was able to attract investment into some of his SPACs. Not all of them worked. He had to shut down some that did not work because he could not raise money. So the reputation of the SPAC founder is sort of the driving force for why people invest in these things when they have no customers and no revenue, at least in the beginning. Their whole objective is we're going to go public. We're going to solicit investment from people based on our name, our reputation, the SPAC founder's reputation. And as long as the creator of the SPAC is well known, for investors, this can sort of feel like investing in a sports star or a winning horse if you're into horse racing. If you notice that a high-profile member of the business community has launched a SPAC, it'll be a listed company on an exchange, a stock exchange, no customers, no revenue, but the reputation of the founder may be enough to at least get you thinking about investing in that particular SPAC. So I've looked at several SPACs. I've actually come close to investing in some because, it really does feel like, okay, this is a chance to invest alongside someone who has shown that they can be successful in business. So it's tempting, but there are risks, okay? Because sometimes winners lose too. Even winners, even sports stars can have a run of bad luck. For example, Warren Buffett, Berkshire Hathaway, lost billions of dollars in airline stocks in 2020. He sold all the airline stocks when the government started shutting down the economy. Nobody was traveling. You couldn't really get on an airplane. And Buffett sold out of the airline stocks at a loss of billions of dollars. So if Warren Buffett launched a SPAC, right, a lot of people would want to invest in that. And yet this guy has lost billions of dollars pretty recently in the last few years on airline stocks. You can look up that story online. Just search on Warren Buffett loses billions on airline stocks, and it will tell you the story of what happened. If he had just held on for a little while, he would have done better. But so if you think about Warren Buffett, is Chamath Palihapitiya in the same level of reputation? Not really. Warren Buffett's been around for decades. This guy has only been around since Facebook days, since before Facebook was public, around the 2010-11 timeframe. He was a member of the Facebook team pre-IPO. He got pre-IPO stock. So, but let's talk about some successful SPACs, because like I said, there have been some pretty big successes, and they're worth mentioning here because SPACs they're actually good things if they're done right. DraftKings, online betting. You've probably heard of DraftKings. They were founded by a SPAC. Initially, no customers, no revenue. The SPAC went public. It started attracting investment. The SPAC acquired DraftKings. That's the way SPACs do this. They go public. They have no customers, no revenue, no real business. All they have is the reputation of the founder. And then they have to buy a company. They have to actually build something from a company that they buy. That's what happened with DraftKings. They were acquired. This was part of a SPAC originally. Another one, Lucid Motors. You probably heard of Lucid Cars, luxury electric vehicles. They are also a supplier of batteries to Formula E racing cars, to that racing series. So Lucid Motors, electric cars, and supplier of electric batteries. Initially, a SPAC was founded, no customers, no revenue, and then Lucid was acquired in a SPAC. The SPAC was, the name was changed to Lucid Motors. So that's how these companies kind of decide to go public. Instead of the traditional way, which is to raise venture capital, they go public via a SPAC, a special purpose acquisition company. The money they raise is from the reputation of the founder of the SPAC. So MP Materials, this is a huge deal. MP Materials was brought public via a SPAC. This is a huge deal. The Department of Defense, the DoD, just took a big stake in this because this is the largest rare earth mining company in the Western Hemisphere, MP Materials, and they're based in the United States. So this was brought public via a SPAC. These are winners. DraftKings, Lucid Motors, MP Materials, these are huge winning stories, business success stories, brought public by someone who initially created a SPAC that had no customers, no revenue. They acquired, the different SPACs acquired these businesses. That's the way SPACs work. They raise money using the reputation of the founder. They buy a business, and hopefully that business ends up being like one of these. SoFi is another big success story that was had its origin with a SPAC. Okay, SoFi is the largest online lender in the U.S. They started off in education, right? The education field. Iridium Communications, if you look up this company, it's a high-tech company. This was actually founded, it predates Chamath Palihapitiya's experience with SPACs. This SPAC, Iridium Communications, this is a big success story. I believe this was before 2010. It was either 2009 or 2008. SPACs have been around for a while. Chamath Palihapitiya sort of brought them out of the darkness a little bit. So this guy was a pre-IPO Facebook stock recipient. He worked at Facebook before they went public. Pre-IPO means before they had their initial public offering. So Facebook did not go public via a SPAC. Facebook went public the traditional way. They raised venture capital money, and then they had an initial public offering. So I have done that. I have been involved in companies that have gone public. I have received pre-IPO stock. It's pretty exciting when you're working at a startup and you have pre-IPO stock and then the company goes public. It's pretty exciting, but it does not make you a genius. If anything, it makes you lucky that you were smart enough to get hired at that company and the company went public. So Chamath Palihapitiya, more luck than genius. Warren Buffett, more genius than luck, by far. He's been around for decades, right? So Chamath Palihapitiya, not a genius. He was a pre-IPO Facebook employee. He has had very mixed results with SPACs. If you look up his name and if you search on his name with SPACs, you will see that he has closed a couple of SPACs that did not work out. And he's had pretty mixed results with SPACs in general, although he's sort of closely connected in people's minds. He's got the mind share, right? He's got the mind share for SPACs in the high-tech investing community. So, all right. So some stuff I could not fit on the board. Before you invest in a SPAC, you have to decide. First of all, you should never put more than like 1% of your net worth into something that is kind of gambling. Because even though there are a lot of successes, SPACs, you're dealing with startups. You've got an initially traded stock that has no company associated with it, that's raising money based on the reputation of the founder. That founder is hoping to find a great company like DraftKings or Lucid or MP Materials or SoFi or Iridium Communications, but they may not. They may find a company that is a crummy company. They may be pressed for time, and instead of shutting down the SPAC, they decide, well, we're going to have to buy a company, any company, and then the company doesn't make it. So you're really sort of gambling with your money, and so never put more than 1%. I mean, if you're 1% changes in scale as your net worth increases. So 1% for somebody who's worth 10 million, right, is different from 1% for someone who's worth $1 billion. It's a different sort of investment, right? So, but still, 1% is a good rule of thumb. You never want to risk more than that in a gambling sort of investment. And to drive that point home, I'd recommend that everyone do a search on list of failed SPACs. list of fails, SPACS, and you'll see a list of SPACs that have failed. And this guy was involved with several of them. So investors who are conservative may put SPAC investing in the same category as angel investing in terms of the amount of risk. That's probably fair because you're dealing with startups, right? At least with an angel investment, the startup has already started and it's a real company. With a SPAC, there's not even a company, right? When a SPAC is founded, there's no customers, there's no revenue. There's only a founder, a SPAC founder, who's trying to raise money based on his reputation. He will then go out and buy a company, and the SPAC founder hopes to find one of these types of successes. So if you're a startup founder and you're earning revenue in your startup, you've probably been approached by sponsors, SPAC sponsors, people like this, who have said, you have a startup and it's making money, let's take you public via a SPAC. So you want to think about, does that sort of align with your goals for your company? Because the SPAC founder, he's just trying to make a buck off of his reputation. He did not help you build your revenue producing startup. So should you go public via a SPAC? I would tend to say no, unless you think there's so much competition in the space that maybe your startup does not have much life left. Maybe it's better to go public now in a SPAC than later, right? But if you think you have found a good business in your startup and you're making revenue, you should probably tell SPAC sponsors, no, it's cool that you have a great reputation, Mr. SPAC founder, but for now, I'm going to continue to grow my startup. It's a choice you have to make. And one of the things you can do is you can talk to legal and financial advisors, attorneys, and people in finance who have dealt with SPACs to get to get more information and to get advice. If you go public through a SPAC, does that really align with your goals? If you're a revenue earning startup, do you really need to take investment from someone who just wants to make money on their reputation? Wants to sponsor a company to go public? They get a lot of shares. They get a lot of. There's a big payoff. If you search on the payoff for SPAC founders, it will explain the windfall that they reap if they find one of these types of companies. So you want to be careful. I would not do it. If I had a startup that was earning revenue, I would. It would have to be a pretty unusual situation, like my startup could be put out of business because there's so much competition. I'd rather go public now. And yes, the SPAC founder will make a ton of money off something he really didn't build with blood, sweat, and tears, but your window of opportunity might be shrinking. That might be a situation where you'll want to listen to SPAC founders. Otherwise, do it the traditional way. Take venture capital money and do an IPO. If you have any questions about this, you can post in the comments. I'd be happy to answer any questions that you have about this. And I really want to thank everyone for watching, and have a great day.